if you pay any amount of taxes, you need to pay attention because there is a risk you are wasting a lot of money. The average worker in Japan pays 32% income tax. That's a lot, and that's why Japan is only ranked number 24th out of all the OECD countries. When you think about it, that's completely crazy. It's a third of the year just to pay the tax, man. That's a lot of money, and there are perfectly legal ways to save a lot of it. And when you have a family of 4, like myself, you know that every penny counts, whether it's to pay for the day-to-day things or to invest for the future. So that's why today I put together a list of the 10 most usual and often underutilized way to legally reduce your taxable income, whether you're making the average $39,000 a year or you are making a lot more money. This should be very useful when you go talk to your CPA about how to optimize your taxes, because for investment, just as for taxes, you should not listen to a guy like me on YouTube. You should talk to a professional before making any decisions, whether it's a CPA, tax accountant, or like we say in Japan, zeirishi. I hope this list is going to be useful for you in 2024. My name is Johan from Economia. Welcome back to the channel, and let's start with number 1. The traditional retirement account called 401k in the US or DC in Japan. And DC is short for Kiyogata Kakute Kyushitsu Nenkin. Basically, the way it works is you have your own contribution. Sometimes your employer contributes the exact equivalent there. So you have one-on-one matching, we say, and this money is invested in the stock market. The stock market is usually returning 8% a year, and it piles up over time up until you go for retirement. So this is a great way to put your pre-tax money for your retirement to max out your contribution. And if it's matched, it's really good because this is free money and to put a nest egg over time, and it has really good tax benefit. You can see on screen that if you do that for 40 years, you end up with a very good amount of money. So if you have access to a DC account in Japan, this is your first step to start saving a lot of money. And you can take all your contribution out of your taxable income every year. And if your employer doesn't offer a DC retirement account, do not despair, because there's another solution called iDeCo, which goes for individual defined contribution plan. So whether you're self-employed or employed but don't have access to a DC account, then you can use the iDeCo. The way it works is depending on your situation. So if you're self-employed, you can put every year up to $5,800 of contribution. If you are employed and don't have access to a DC plan, you can put the equivalent to $1,900 a year of pre-tax money, and you can put all your contribution as a deduction of your taxable income. It works the same way. You have access to financial product that you invest, and over time they're gonna compound. So the amount is smaller, so what you're gonna end up with is less money, but still it's a very good way to invest for the future and already reduce your taxable income. Capital gains tax. So Japan is a little bit particular. If you live in the US, you are familiar with the short-term capital gain and long-term capital gain and the difference in taxation. In Japan, there's no such thing. Every capital gain, whether you had it for short-term or long-term, is taxable at 20%, though you can deduct some of your losses. So not much interest there. But if we're talking about real estate, things are different. Real estate is usually taxed at 39% for capital gains. That's a lot of money. But if you've kept this real estate for more than 5 years, you go for 39% to 20%. That's a massive savings. But there is more. If we're talking about your primary residence, you can save even more money. And it's really important because the price of real estate has gone up a lot across Japan, especially in the big cities like Tokyo. So if we're talking about your primary residence, and if you've made a lot of capital gain and you need to sell it for any reason, you can deduct the equivalent of 30 million yen, which is about $214,000 from your capital gain before calculating anything. So let's say you had 50 million of capital gain. You can deduct 30 million of this capital gain, so that's only 20 million, and then you apply the taxable income. You can see that's a very, very massive saving here. But there's more. If you had this main residence, or primary residence I should say, for more than 10 years, then the tax rate goes from 20% to 10%, so it's half of that. This massive advantage and reduction in taxes cannot be combined with other advantages, although there are exceptions. So here, really important, talk to a professional, CPA or your realtor or your public scrivener or notary called the Shihoshoshi in Japan. This is really important to have a professional when we are talking about real estate, because it can be really complex, and actually it's complex for anything related to taxes. Continuing with real estate, this is the home loan deduction. Basically what it says is that every year, if you have a loan to buy a house, you can deduct 1% of the amount of the loan from your taxable income. Let's see how it works. Let's say you have a 50 million yen house, which is about $350,000. You can deduct every year 400,000 yen or $2,857 for 10 years. But if you're making more than 30 million yen a year, you don't have access to that deduction. Then comes the standard deduction. So any employee in Japan is able to use this deduction as a flat deduction on the income. So that's really good. So it starts at the minimum of 55,000 yen, which is about $3,900, or your gross income, whichever is lower. And it's capped at 1.9 million yen or $13,900. It's a blanket deduction, so it's really cool. Everybody has access to that. And usually that's the one that most people remember when they are doing their taxes. We have the child and the spouse deduction. So this one is really good. As long as you have children, you can ask for this deduction. And the deduction is $2,700 per child per year up until they reach the age of 16. So let's say you have 2 children under 16. You can basically ask for $5,400 of deduction every single year, and that's not related to your income. So that's really nice deduction. And when your kids are up to 16 to 22, the deduction is even higher at $4,500 per child. This is a really good one and very helpful for every family. The next one is the spouse deduction, and this one is so traditional and so Japanese, whereby traditionally the husband goes to work and the wife raises the kids. Although now the workforce participation rate of women is 54%, still low but increasing. This tends to be less and less, but there is still a period of time where traditionally the mother is going to be the one that stays home. And you can ask for a spouse deduction there. The way it works is that if your spouse is working and making less than 1 million yen a year, which is about $7,000, then you can ask for the deduction. And this deduction itself is about 380,000 yen, which is about $2,700. And you can ask for that. It's capped, but that's a good one to do, because it brings a little bit of money in the home and you get a deduction on it. Medical bill deduction is one that I really like as a family person, because you always have a lot of medical bills when you have kids. Although they are mostly covered, there's always out-of-pocket expenses. So this one particularly targets these out-of-pocket expenses. It is capped at 2 million yen a year, which is about $14,000. And the calculation is a bit tricky, so follow along with me. So you take your out-of-pocket amount, which is whatever you paid minus any reimbursement you could have, and you subtract 5% of your taxable income, or 100,000 yen, which is about $700, whichever is smaller. And that makes your total medical expense deduction. This is a really good way to reduce a lot of your taxable income, and anyways, this money has come out of your pocket for medical expenses, so you might as well recover a little bit. Life insurance premium deduction. So life insurance is really big in Japan. I know it's big in other countries like India as well, and you have the possibility of deducting part or all of your premium from your taxable income. I prepared a detailed table for you because it's quite complex and it's just changed. So you have three types of life insurance. You have the typical life insurance, you have the long-term medical care insurance, and you have the individual annuity insurance. All of them works the same way and they are taxed on the income tax and the residential tax. So for the income tax, you can go from deducting the full amount up to $143 of premium, and it's capped at $286. After you have the residential tax, which works the same way. When you are under 12,000 yen or $86, you can deduct the full amount and you're capped at 28,000 yen or $200. So that works for every contract that was signed on or after January 1st, 2012. For everything that was before that, there's a different calculation. So that's why you need to look very precisely and very carefully to your tax form, or again, talk to a professional. Number 9 is very Japanese. This is the earthquake insurance premium deduction. As you know, Japan is prone to a lot of earthquake. We had a terrible one on January 1st this year and people are still suffering. And everyone who has a house or live anywhere has an earthquake insurance. And basically, you can deduct your premium up to 50,000 yen, which is about $357 every year from your taxable income. Number 10 is charitable donation deduction. This one is great because you can deduct from your taxable income all the money you're giving to charities. I think this is great. People give a lot in Japan traditionally, and that's one I really like because you're doing good and you're getting something back in return. And it's actually quite generous in terms of calculation. You calculate the following way. It's either your donation amount minus 2,000 yen, which is about $14, or 40% of your total taxable income minus 2,000 yen or $14, and you choose whichever is smaller. So as you can see, this can be quite generous depending on how much money you're giving and depending how high is your taxable income. But again, I think this one is great because it feels good and it's very generous thing to do and you're getting something in return. As we've seen, there are many ways to reduce your taxable income, but it's highly dependent on your personal situation, how much money you're making, what's your family situation, whether you're a Japanese citizen or a foreigner living in Japan and subjected to tax convention. That's why it's so important to talk to a professional and set yourself up this year so that you reduce your taxable income while putting money on the side. Please let me know in the comment down below if that was useful. If you like this content, please give it a like and do not hesitate to subscribe for more content to come. And if you want to know more about investing in Japan, I've prepared those videos for you to check. Thank you again for watching, and until next time, goodbye.